Hello, Warriors. How's everyone doing today? Hi, Ingmar. K-Man's here. Steve, Ryan's here. How you doing, Ryan? James Blake is here. Okay, we have a lot to discuss. Hi, Hugo. Hi, Kyle. These court rulings, yes, about stopping the tariffs, plus Nvidia. Giannis, nice to meet you. Welcome to Face. I believe you're new.
Actually,
Anyway,
Giannis, I
oh, it
met, I
isn't
met, I met him I met him in person,
live. You met him
live.
live.
I met him live. I met him in person when the first time I met Steve.
Oh, okay.
I met Giannis at the top of I don't know what hotel in Athens, but yeah,
Oh, okay.
he actually used to listen to the Morning Edge when I was at the Wise Trade Group and MB Trading.
Okay.
Yeah.
All right. So let's talk about what's going on here. Blake, you want to just go ahead and talk about the tariffs? It's also Nvidia knocked it out of the park, like you said they were going to. And the
Yeah,
dollar
what's it
started.
doing pre-market? I haven't even looked. We've been so so incredible. I was up really late. K-Man, he opened his eyes in the middle of the night. Our chat room was hopping last night. I mean, it was crazy. I'm gonna just say this really quick because I know Ryan and K-Man have more thoughts than we do because they've been up and around for hours now. But I will say that the immediate reaction here is that there's this court ruling against these reciprocal tariffs, the blanket tariffs that the Trump administration is putting on. There is a if you read through like some of the analysts and what they say, and I'm trying to, as we all are in this new Trump era of Trump 2.0, we're trying to become experts in a lot of different fields really quickly. I mean, that's all of us are. It's not me, you. It's like we're slapped upside the head with the IEEPA court ruling going, "Hey, your blanket tariffs are illegal."
Illegal. Yeah.
Yeah. And so you go, "Well, what the hell does that mean?" And then you're like, "Okay, so sectorial tariffs are okay. If the Trump administration wants to go, look, we're going to put tariffs on auto parts from China. Fine, great. But to put a blanket tariff 10% across, the globe and, 25% over here, blanket, whatever, and it's not sectorial, that's where they're finding this illegal. Now, the Trump administration's going to appeal. It's probably going to be several weeks of doing this. The bottom line is we're still going to have tariffs, and there is a way that the Trump administration can actually enact everything they want to enact. It's just going to be a little bit more time consuming. So and the timelines are going to be very erratic. It's kind of like you go back to Trump 1.0, first there wasn't blanket tariffs. Trump came out and he's like, all right, I'm tariffing this country and I'm tariffing that country and I'm doing it for, and all toilet seat covers that are coming from China, and a washing machine that came from Chile. Whatever. I'm just making stuff up at this point as far as that goes. But targeted, I think, is okay from what I'm reading, or sectorial being sectors, but blanket tariffs is where the issue is. And don't think for a moment that the Trump administration is not going to appeal. That's the first thing they did. And this was like my immediate reaction last night doing a live show in Australia. I was like, they're going to appeal. And then as I was talking, I'm like, oh, they just appealed. Of course they're going to appeal and they're going to fight. So this is going to be very erratic. But I'm going to go back to something that I said last night and I've said for weeks. I heard K-Man say it on the Flow show this morning. And then I'm going to let you talk about Nvidia and get these guys' opinions really quick. But I wanted to get this all out of the way. I agree with what K-Man said because I've been saying it for weeks too. This this issue, whether it's tariffs whether it's erratic behavior, whatever it is, whatever you want to, any which way you want to look at it, investors don't want to own dollars. It's too dangerous, period. So take that for what it's worth, guys. I mean, the dollar has had a nice little bounce and I'm selling into it. So, I mean, because who wants to be holding a bunch of dollars during this mayhem? I mean, you're going to have this continuous over the next several years, and I'm sure a bulk of it's coming, within the next, has already started, and it's going to be for the next several months. You're going to see just a move away from the dollar, and pension funds, institutions, investors will be looking for different safe havens,
Where are they
whether
going
it's
to
in
go?
well, it's going to be a diversification, Dale. It won't be, I have 55% of my holdings in dollars. That will probably come down to 45%. I'll put some in the euro. I'll put some in gold. I'll put some in sterling. I might even buy some Aussie dollars. What the fuck? Why not? They're, they're, they're,
As far as
it,
asset classes though,
well,
so
yeah,
you're going
well,
away. So that would
I,
be PMs, precious metals.
Yeah, PMs, maybe Bitcoin. I don't know, Dale. I just know that no one, I mean, who wants to have dollar exposure? And again, I'm going to let these other guys chime in, but that's the thing that I think the takeaway has to be, no matter, you get
I
a
yeah
recovery in the dollar, people are going to sell into it. And that's the way I'm looking at it. Anyway.
yeah. So at 96 and a half, I want to own dollars, but just for a while. So yeah, the trend's down. So yeah, nothing to really. This has been going on for a while. It's a confidence crisis that's brewing.
Yeah, I think
And
so.
anyway, I think this is important to pay attention to in tenure. Maybe it's a right shoulder. I've seen counts where we could go up one more time towards 470, but yields look like they're peaking. To me, I'm now in Stelios camp, whether we go up there one more time. And I agree with you because look at what's going on. We can't even close over 50. 50 was a big deal. So the gap must have been on the court announcement, right? Where we gapped up towards 100.
Yes, that's exactly it. Yeah, the
And
euro traded down to 112 and 112 and change, 112 15 or something like that. It sucks because
yeah,
I put bids underneath the lows on almost everything last night before I went to bed. I'm like, if they flush this dollar one more time higher, I am selling into it. And unfortunately,
right.
none of my orders got triggered last night. I woke up this morning pissed off at that just alone. But
Mhm.
I was hoping there'd be one more stab higher in Europe. I thought Europeans would come wake up and go, "Oh shit, I need to sell all my dollars," and then I was gonna just or I need to buy back dollars, and I was gonna go short everything. But it's unfortunate. So yeah, that gap up is exactly why it happened.
And
Correct.
check out the S&P's made took out the highs and it's not following through just like the dollar. So we're probably back to this. If the dollar fails, maybe we'll get this correction in S&P's. This action's not so great. It has kind of the same give back properties that the dollar had today. So we'll see. I don't think stocks will be immune. I still think there's some kind of low coming in early June. So they flushed out, they got all the stops, and now we're back underneath it.
Right, false
Bond,
breakout.
yeah, it could
Yeah,
be.
could
So
be.
anyway, uh, K-Man and Ryan are both here, right?
Yes.
Yeah. So
Sure are.
Ryan, hey Ryan, how are you, man?
Okay, mate, you?
Good. So did you do anything last night? You in the bearish dollar camp? Did you do any currency trading last night?
I slept like a log last night, Dale. I woke up, I
Okay.
read the headline, I hit dollar yen as quick as I could push the button
Okay. Yeah.
because
So
it complete
yeah.
complete crap. It doesn't matter what court throws stuff at Trump, he's going to swerve around it. He's going to get what he wants. He's going to tinker, tailor, whatever. And I also, Blake was saying about becoming experts. I also became a trade lawyer in between the Flow show and this show, thanks to Chat GPT. So you want an expert? I'm there. But yeah, you might not like my rates. But yeah, I've said it earlier in the show. Pretty much after I woke up and came online, I wouldn't be surprised if the dollar goes through yesterday's lows, let alone the lows of today's, because I think, yeah, any investor's going to look at that and go, "What a shit show!" It doesn't matter if the court says there's not going to be any tariffs. It's a crap show, and we don't want that. So yeah, I'm expecting the dollar to maybe get a little bit of a smack round the chops today, more than it has already from last night.
Yeah, I went with Aussie yesterday. I think if we can clear the 64.5 level,
Oof.
we can make some progress back towards its high. What do you think?
If you look at the price move there, I don't think anyone bothered to wake up Aussie dollar and tell it about the news last night.
Yeah.
But
Yeah.
it's also similar, and K point is that similar in the MEX and Canadian dollar. It's not,
They're not moving.
No volatility there, so that gives you a little bit of an insight as to how the market is viewing all this sort of stuff. But when you're talking dollar yen, you still got to keep an eye on those Japanese yields, and they're still creeping higher, which obviously likely means that we're going to see a bit more yen strength on the back of that.
This was almost halfway back here from this?
Yes, I think it might have just gone through the halfway mark, give or take.
So we could have something like this from here. That would take you to 38. And that's a number I've been looking for a while. Take out the 140 level. We all know how bearish people are going to get in US dollar yen if we ever take out 140. So that's, everyone's got that number right here as a breakdown under 140. So, oh yeah, I just wanted to say that I was talking about Euro Pound yesterday, and I said I thought we could still get a third drive. We did. It did not blow out the divergence, and it's fighting its way back too. So, anything else you want to talk about? The metals are screaming, especially silver today. Well, we'll see. There's, where the flow away from the dollar is also going there, and the gold silver ratio starting to look pretty heavy. We'll see. It's been playing in this area for quite a while. I know some Ellioticians that were looking for one more pop to new highs, but I would favor silver still. Look at that, sitting right on the 50. So you would think that it would try and at least work its way back to the breakout. If we take that out, this was a breakout 92. A feel on yields here, Ryan, before I go to K.
Yeah, we're back up. Well, we were back above the 450 mark, and those yields were rising as dollar yen was dropping, which tells you the story that it's another risk off US style moment. But we've been saying it this morning on the Flow Show. We couldn't say it enough. You've got to be careful with markets at the moment. It's really light switch stuff. We could be bearish for the rest of the week in the dollar. Coming next week, we've got ISMs and non-farm payrolls and all the rest. And if the numbers are good, well, all of a sudden the dollar's back in favour again. So the only thing you can control is your risk and your trade management. You can't control what the markets do. So if you get stopped off, make sure you get stopped out on your terms, not someone else's or the markets. And just trade carefully, folks.
Yeah, I don't know how many examples you need to know that being a position trader is very dangerous nowadays with leverage positions.
Yeah,
almost
it is dangerous. Me, I don't like leaving orders overnight. I made a schoolboy error last night. I was short dollar yen up into the 145 because that was my level. We tapped it before the fix, over the fix, couldn't get through. Went to bed with an offer at 145.08. That got taken out in that move, lasted 6 minutes before getting stopped. That's trading, but I lost what I was prepared to lose, nothing more. That's the way you got to treat your trading. If you put a trade on, be prepared to lose what you're going to lose, and then doesn't matter what the market does after that. you can't have any regrets.
Okay. The oil tried to break out again and got rejected. It's been quite a few times. So this is really the level it needs. If it gets through this level, it's got $8-9 in it to the upside. So just quickly, Nvidia is up a ton this morning. We have it. Here's the pre-open. 141.92, so that's up about $7. Look at it. There it is. One thing I'd point out about maybe not getting FOMO even on Nvidia is this. I mean, that's one hell of a spike to clean out everything. Maybe it's going to keep going, but I'm surprised we're still diverging
You
after
know,
a move
Dale, if
like
you
that.
looked at the last three earnings,
They
Nvidia
were
is
all
sold
good
off. Well, yeah, but
after.
afterwards, I mean, you know, look at the following 3 weeks after Nvidia earnings, the last three earnings, the
Yeah,
Nvidia's gotten crushed. So
yeah, yeah. So we'll see what happens there. The rest of the Mag 7, not, uh, Meta still putting in a lower high. Apple's been the weakness. Amazon doesn't look good. And dare I say, the strongest Mag 7 that's still making new historic highs is Netflix. And I'd be pretty careful with this. It's been, last confirmation was, last Friday. But, it looks like we could be getting ready to put in some type of top here. So this has been the strength. It was the first one to make new highs. The April lows weren't that bad, but even this, Netflix, I would change channels and maybe go to Prime for a while.
I gotcha.
But
That was funny.
all right. So you go to Prime because Blake doesn't like the programming on Netflix. Says it sucks now, so you may as well short the stock. All right, and I want to go to K-Man now. Kay, how'd you handle all that
Good morning.
volatility last night? Good morning, buddy.
Good morning, Dale. Before, I tell you how I handle it. Don't throw away that old record player in oil yet, huh? Because you're going to need it every day when we come up to 62, 63, and the
Yeah,
reject. Don't
yeah,
throw away that old record player yet.
I won't.
Um, how I traded it? Well, um, twofold. I had this alarm go off. What was it? 1 o'clock or so in the morning for me. It was like over the BOJ really. Yeah, wondering what was going on. Before I knew what happened, I got stopped out on a few positions. But after a little while, I started to re-enter them and just having like those thoughts about the appeals, and
Yeah,
even imagining that. Um, for imagine for a second that the courts get in their way and there's no tariffs or no additional tariffs or the reciprocal tariffs. Who's going to fill up the gap that the big beautiful bill is going to leave? I think, however we look at it, I don't think it's really good for the dollar. You may have, as I said on the flow show and in our room, you can have like short-term dollar demand because asset managers, money managers, I'm not talking about us retail traders, we are just like really small fish, but they may have to, or their models may tell them that if there are no tariffs, they need to revise their dollar outstandings or their positions a little bit. But then when they are going to wake up, when the human brain will wake up, they probably will sell all those dollars out again. So I think the reaction this morning, as I said, I can understand some of it because some positions that people have taken on the back of tariffs may need to be screwed back. But then the market stood up pretty quickly, saying that, "Nah, this is a load of crap, and whatever happens is not going to be good." And that's exactly what I did then in a second leg. So I reloaded everything basically. So
okay.
yeah, I'm still short dollars. I mean, that's what I said on the flow show. The one thing that is going to really make me change my mind is if US hard data continue to defy the laws of gravity, and we are going to be forced to start to buy dollars again for whatever reason. But I don't think that's going to be immediately today, or that is going to be an immediate thing, you know.
Yeah.
Yeah. So for the rest, no,
Did
yeah.
you
I,
doing
I, I
anything with notes or bonds? I know you said you wanted to, but it didn't quite go low enough for
well,
you.
I'm a bit afraid of standing in the way of it, because if there is this faintest possibility of things going a bit out of hand, and that bill needed to be funded and stuff, we could actually go even a bit higher on the yields, or a bit lower in bonds. But I'm going to be patient, you know. I'm still watching, because the Z10, for instance, the futures, they are still above 110.
Mhm.
And where I'm going to start to get interested is around 109 and below. So
Okay.
that's back to your 460s, and then we will see what happens above there.
Okay. All right. So Blake, you got the control of our television sets, and it's like the outer limits.
All
But
right,
most
thanks,
people
Dale.
don't remember.
No,
No
I
one,
don't.
anyone raise their hand if they remember the show Outer Limits.
I do not. I
It
do
was
not.
like no one. Oh gosh, oh
There's a
there,
few.
Rick,
There's a few.
Tony. Okay, so were you scared when they announced that they were going to take over your TV screen at the beginning? I know I cried to mom. Mom, they're taking the TV away. Anyway, go ahead, Blake. Sorry.
All right. So, looking around and just looking at everything. I mean, Euro's trading at its highs. After, we were just talking about it. This is a situation where, you got people. I got stopped out on a few of my dollar shorts last night. K-Man did. I did, as soon as the headlines came out, I was like, got stopped out a couple things, hit the bid on a couple other things, and I was like, damn, that was crazy. And there's a lot of traders that happened to, and they're like, shoot, I got to reestablish these positions, and I think that is going to be what people are looking at today. I don't know how far people are going to try to chase this euro, but I think if we get a daily close above 113, that's pretty bullish. You look at like the breakout point, going back, back here to the summer of 2024. We basically are holding that. That's a 618 retracement, so you can have a technical argument there. Remember, Sterling is still in breakout territory. It pulled back to the 38% retracement. You can see it right here at 134 and change. That was basically the low overnight. So that's, taking off again. I'm a little irritated. I'm not long Kiwi dollars, but that's holding its wedge support. Remember, the market's repricing, the RBNZ and, the OCR, and cuts that are not probably coming for the remainder of the year. And you guys are talking about the Mexican peso and the Canadian. They are under a different framework with USMCA. And so I've been hoping the dollar mex, after breaking this wedge resistance yesterday, was going to push up towards the 1950 level to get short. But man, this thing is just reversing right now, because I think everybody is, coming to the realization, well, wait a second, Canada and Mexico, they're in a different bucket right now. And so the Canadian currency might start to strengthen again. Mexican peso, you might see that start to strengthen again as well. One of the other things that I think is pretty key is this dollar yen. I was long last night. I actually got out for break even. I was long at 145.75 2 or something like that, and I got out for like 5 pips or something. um, but it's a real big rejection of a 618 retracement, the underside of that trend line. Now, I don't know how to trade the yen. I mean, I've been very vocal about this in our chat rooms, on our live shows, especially the private live shows. I'm like, I really don't know how to approach the yen right now, because positioning is so many people, so much fast money has, long yen on. And you look at CFTC positioning, it's still historically the highest level it's ever been. So, that means that institutions and some of the hedge funds are expecting this to eventually happen, which I think they're going to be right. But I have a hard time, trading it on the long side, but also on the short side because of the positioning. So I don't know what to make of, the dollar yen right now. But I'm glad I'm not long right at this moment because it's really come off pretty good overnight. We're at a pretty pivotal 38% retracement right now, so not sure with what to do with it at this very moment. When you're talking about the S&P, and I know you mentioned this already, Dale, that is a false breakout after hitting new highs. And like I said, the earnings, like Nvidia earnings, it's going to be really interesting to watch how the
It's up
market.
7. Yeah.
Yeah, it's up 7 pre-market. It was up what was it? 2-3%, 5%,
Yeah.
excuse me.
Yeah.
It's up 5%, something like that right now. It's up 7, up 5%, correct. And it's got a, pennant. This is just in case things went the other way. That's what I had. That's why I had that drawn out the last couple of days. But I mean, it looks bullish, but I sure as hell wouldn't want to see it back below 137 today. That'd be a little concerning, I would think. But we'll see. I think Nvidia is going to be a bit of a driver here. And what else is really interesting, and then I want to, hear from.
Uber is the driver.
Yeah, you're focused on Uber. I'm gonna go to it in 1 second. I just want to talk about gold. Sorry, Dale.
It's all right.
I haven't even looked at Uber. I know you keep sending
Can
out.
I have a cup of your coffee, bro?
Well, after last night and this morning, you
Yeah,
have
wow,
to have a lot
you're
of
gonna
coffee.
need. Yeah.
But
Go
look at
ahead.
gold. I mean, the pullback has been
Yeah.
pretty minor, and I know a
Yeah.
lot of people are probably trying to lean into, shorting gold
Yeah.
because of the positioning. But man, if we get above 33.20 and then above 33.70, I mean, that's going to be really, really bullish. I don't know if I'd want to stand in front of that. I was hoping we'd come down towards triangle support, but that's just not going on. So as I get set up for our weekly unemployment claims, and I think we had some other data that's coming out too. I think
GDP vision.
yeah. Even though it's kind of backward looking, but Ryan, what are you looking at today? What are you going to do? What are you going to do here?
I'm going to take the keys to Dale's bunker and go and hide myself away for a bit in peace and quiet. No, I'm looking at seeing where this dollar goes. I'm feeling a bit bearish at the moment, and this would, I'll just put it in the chat room. This would be the perfect time to see a jobless claims wobble hitting the market now. If we get a 300k jobless claims, this market might shit the bed.
Oh, you're getting a little nutso here. I mean, that's a big call from Ryan. Ryan usually doesn't make these big calls. So
Oh no, I'm just
300.
saying it's you get these situations where you think, right, if you need to tip something over properly, then here's a bit of data that will do that for you. A bit of icing on the cake.
That would be something.
Nothing.
Yeah, we haven't seen above 260,
No,
270,000 in like 3 years or some shit. I don't know. It's been a
But
long time.
It's probably going to be nothing. But if you wanted to pick a time to give the dollar a push as it's stumbling, this will be the time to do it.
Right. Yeah, that would be something. All right. So what are you focused on though this morning other than that? Any other
managing this dollar yen short and seeing if I can stay on the opposite side in my dollar Swiss longs.
All right. Okay. Wow. Okay. You're hedged. Let's call it that. How about you, K-Man? What are you thinking?
Yeah, but pretty much the same. Short a few dollars, trading my sterling yen around, and that's it basically. Yeah.
I'm gonna sit with you on this dollar short trade. I mean, we have
Got a
filled the
bit of
gap.
everything. I got Aussie, I got Kiwi, I got Euro dollar, I got cable.
Wow, you're a little spread out as well. All
Yeah,
right.
but you know what? I mean, you don't need to be full or double positions in everything. If you have half positions in each, I mean, it's still a fair bit.
Absolutely. Hey, Dale, I don't know how you're trading Uber, but it's time to get long Waymo.
Okay.
Screw
I don't know.
Uber, man.
Well, I'm short.
Yeah, good.
So I won't
Stay
weigh my.
short.
I am at least until next week.
All right, let's look at these jobless claims. Here they come. GDP is a little bit better than expected.
Yeah, tiny bit better.
Again. Oh, this is preliminary, isn't it?
Yeah.
No, it's revision. 240 for jobless
Oh, it's
claim.
not quite Ryan's
Oh
number,
my
but
God!
oh, it's shit in the bed. Here we
Up
Oh,
go.
13,
Euro's popping.
13,000.
Yeah, the euro has broken above
Continued
113.
claims is back above 1.9 million though.
Oh, yeah. Oh. Continuing claims. Yeah. Yeah. Well, people are staying unemployed longer, and I have a feeling due to AI, that number is going to continue to go up. So, so there's that. I see Steve is listening in. I know you have. It's been Steve, it's been so crazy the last 24 hours. Did you have anything you wanted to chime in with before we I see you on the morning edge here in a few minutes?
Not really, mate. I mean, nothing materially has changed from a technical perspective. I'm still in wait and see mode. I want to see. I mean, the last 3 days we've practically broken like no key levels. The dollar hasn't changed its direction. U.S. equities seem to be consolidating. So I don't think there is something actionable as we speak.
All right, Steve. Well, I'm gonna catch you on the morning edge here very shortly.
Absolutely.
Long live dollar shorts. All right, Dale. I know you have an interview, so we're gonna pass it over to you, my friend.
All right. I want to thank the team. And if you didn't sign up for the liberation offer, you're going to have to stay in jail. You can't be liberated. I think it's gone this now, isn't it, Blake?
Wait, hold on. I'm sorry, Ryan. I'm sorry. I was just answering one question from Mandy. What time UK time is the flow show, guys?
10:30 London time, whether that's GMT or BST. So
Okay,
whatever it says the time is in London, 10:30, that's when the flow show is.
got it. All right. And I'm sorry, Dale. Your question was what? I was just responding to Mandy
I
here.
forgot. It's all
I
right.
forgot too. See,
Yeah.
it's so funny you say that. I was trying to remember something I did yesterday, and I honestly can't remember. And it's
I know.
While
Fleeting.
you've got good memories, both of you owe me $50 each.
yeah.
What's
Oh,
your name?
are you sure it was 50? Didn't we? All right. If it's
All
only
right.
50. All right.
Anyway, we should have Mike
Oh,
here.
the liberation. Sorry, liberation
Oh
discount.
yeah, is it down?
Tony's been listening in. And Tony, it's nice to have you back here. Liberation offer discount disappears this weekend. So
Oh, okay, that's it.
remember, we've offered 40% off month to month. And we have people that are grandfathered in from the day that we opened our doors 8 years ago that are paying like not much. It's less than $50 a month. So
Yeah.
on discounts, and they've been locked in, grandfathered ever since. So lock in this price. You can be in our community, and there you go. So
All right, let's talk to someone who's locked into what's happening in the markets. I watch uh, Michael Kramer's videos occasionally from my uh, television set on YouTube. And Michael, it's great to have you back.
Hi, Dale.
Financial conditions. You were talking about how they were tightening the last video I saw, and how do you react to what happens day to day in the court? Has it become more difficult for you to be a position trader in this environment, buddy?
Well, I mean, I'm not a position trader.
You
Most of
have
my,
positions.
yeah, I mean, I have positions and obviously like trying to manage those positions in this environment, haven't really been easy. And certainly the other piece too is you're, kind of waiting for the news flow, and you're expecting things like, semiconductor tariffs to come, but the market moves a lot faster than it happens. And so, you open yourself up to this risk of, well, do I chase it higher and add it to my portfolio now and know that semiconductor tariffs could be coming around the corner, and then the market, shits the bed again, or,
Yeah, it's
does it
tough.
not, you know,
Yeah,
and and
yeah.
um
We're
and
trading under a whole new regime that uh, historically, um, I don't think has been like this. I know a lot of comparisons to the 70s, but I was around in the 70s, and uh, you know, I don't remember uh, Nixon affecting the markets the way President Trump is,
yeah, I
or
don't even know.
I don't think he had a meme coin either.
Yeah,
So
well, I don't really know if he's affecting the markets so much. I mean, he is obviously, but a lot of it is just the day-to-day sort of algorithms trying to parse the headlines and making moves out of things that shouldn't happen or that shouldn't be. And so I mean, again, he puts a tariff on Europe on Friday. He
yeah,
takes it off on Sunday night, and the market's
yeah,
higher than where it was before it started.
right.
So it's
So
like,
I mean, well, name the last time you've been able to make a market, describe a market that you just described in your trading career.
maybe during COVID.
Okay,
It was
maybe.
like, like in COVID, it was like, well, we dosed the first person with the vaccine, so the market goes up.
Yeah,
Uh,
okay.
we have 12 patients that responded positively out of 20, market goes up. So
Okay. Maybe
that's about the
there's
bet. Or the unemployment rate was 23%, but it can't get any worse, so the market goes up. I mean,
yeah,
that's basically it. And it's like you got to think in that, not what we're doing right now, but what's going to happen, what's two moves in front of it. And that's the way the market's trying to respond to everything.
yeah.
Um,
So
and
let's see what you're looking at, Michael. I know you look at a lot of things that the most traders, you look at, you're a good technician. You look at charts, but you look at what's happening under the surface with,
yeah,
term rates and what's
yeah.
happening with yield spreads. And why don't you share your screen and let us get a glimpse into your mind. We're gonna get a
I know.
glimpse into Michael's mind
It's
today.
kind of, my mind is kind of uh,
Scrambled
scrambled this
eggs.
morning. So,
Yeah.
uh, well, I mean, first
Okay.
I was looking at, Nvidia, obviously, because
Yeah.
it matters quite a bit here. And the
Yeah.
interesting thing about Nvidia, just not to, the key here for Nvidia, at least for today, is this 140 level.
Yeah.
Because that's where all the delta, it's all the delta, the open positions are all really above 140. And it was interesting because the 140s strikes that were trading yesterday were
Huge,
trading.
huge size, right?
Yeah, they traded a lot of volume. So here's yesterday's volume for this Friday's expiration, and they were trading at 247. So, when you look at the stock trading at 142, if you own those calls and they expire tomorrow, they're not really going to be worth very much today, in terms of really making money on them. And so, if you notice, the stock's been hanging around this 142 all morning. And so I'll be curious to see, what really happens once this stock opens, because if this thing goes, well, if it can't hold this 142 level, all these people are going to start unwinding these 145. Look at all the volume at 145, all the
Yeah.
volume at 150. The stock will just start, moving down. And once it gets below 140, that's sort of when things can really unravel. But I mean, outside
Interesting.
of that, I mean, when you look at the market, I mean, the everything with the tariffs is beyond, confusion, and the S&P minis have obviously been giving back all morning. And I think really the more telling sign of how the market's thinking about these tariffs isn't really so much what's happening in your normal currencies and normal things that we look at. But it's in the currencies that really get affected by these tariffs. And you can see the Taiwan dollar, huge
Yeah.
exporter of chips, continues to strengthen. I mean, this has been a massive move in the Taiwan dollar. I mean,
Huge.
when do you see those types of move, Dale? I mean,
Yeah.
this is a
Like
10% move in a
like
couple of days.
well, not since Turkey
Right.
when the lira was imploding, but
But
this
in this
is
case,
the
it's
opposite.
strengthening, right?
Yeah,
Right.
it is.
Yeah.
Right.
It's like the inverse FX crisis, Asian crisis, FX Asian crisis, right?
Right.
Um, and it's the same thing with the Korean won. I mean, it's again, it's been strengthening. And if the tariffs are all kind of all said and done, then why are they still strengthening? And the yen is basically given back all of its losses overnight and is now
Yeah.
strengthening again. So,
Look at
when
the dollar. Dollar's given back all of its gains.
right. So I mean,
Look
it's
at
a big candle, right?
yeah,
And
it's
and
ugly.
and and when you look at, yields, I don't really think today's numbers really matter all that much. So, big deal continuing claims are at 1.9 million. They've been there really for some time. And you would expect as, the number of job openings come down, people are going to it's going to be harder to find a new job. And I think that's pretty much being reflected. And so, you know, 10-year kind of being flat at this point, not really a big deal. I still tend to think that rates are going to go higher. But, I mean,
Could we
when you
go to
look at
4% first, Mike, back down to that support level? There's a big triangle and have people feel like there's relief. That's it. Rates have peaked and then rally back to new highs and 5.5% yields.
um,
Down to 4 and then up to 5.5, make new highs in yields after this pullback.
I don't know that you're going back to 4. Uh,
Okay.
I think you have a better chance of hitting 5 before you hit 4. Uh,
Okay. Fair
maybe
enough.
maybe that's I mean, you're at 447, right? So the odds are 50-50 basically at this point.
All right.
So I mean, I don't know. I mean, it's going to largely depend on, how this job data comes in next week and how some of this inflation data comes in. But, the deficit is obviously getting to be an issue and the
But
debt's getting to be a bit of an issue.
yeah,
So
but that's pretty heavily publicized right now.
it is.
Have
It
you
is.
have you looked at how people are positioned? We've gone from extreme shorts in treasuries to even more extreme
Right.
shorts in treasuries. So
Sure.
does that tempt you to try and maybe put on a long in TLT for a trade, at least for a trade?
Um, well, you're assuming I can move fast enough to do that, and the problem for me is that I can't, right?
Okay.
So
Uh,
which is why I really try not to actively trade anymore, because I'm
okay.
just always getting pulled in a million different direction from my kids and my family and stuff. So
Yeah. Yeah.
it's just impossible for me to always be in front of a computer screen.
Yeah.
And so, I mean, again, am I, from my perspective, I'm not actively writing about or actively talking about, and this is really more about how I think about things. Um, it's more about what my research is sort of suggesting and what I'm
Right.
publishing. And I'm not publishing certainly right now that 10-year rate's going back to 4%.
Right.
I'm
Okay.
more of the mindset that, as you stated, term premiums are going higher, which is basically the added rate that investors are asking for to be holders of these things. The other thing too is that when you look at if you look at where the treasury market is basically, or the Fed fund futures are telling you where, the neutral rate is, or the Fed terminal rate is at 330. And then you just look at where, and you kind of think about the spread between um let me see if I can find this quickly while we're doing this. But while I kind of talk you through it. But in the meantime, like if you think about this, where the spread is, and you think about where Fed fund futures should be, and historically what happens here, this is it right here. Basically what this chart is showing you, let me just kind of pull things back. So, I mean, if this is your Fed funds rate over time, and this is, your spread between the 30-year and the Fed funds rate over time, and the market's basically telling you right now that the Fed funds rate next year is going to be 330, and then in 2027, the Fed funds rate is expected to be 350. What it's kind of implying to me is that the Fed funds rate is going to bottom in 2026 somewhere in that 330 area because 28 goes up to 380. And so if we look at the
Wow.
historical norms and we say, well, why if the Fed funds rate is going to be 330 at a low, why should a 30-year only be 5%? I mean, historically, that premium is 200 to 400 basis points. So you're talking about at a minimum that a 30-year should be pricing somewhere around 6.5 to maybe well over 7 if this plays out historically. And when you look at a 10-year, it's the same
Yeah.
thing. I mean, the 10-year historically tops out. I mean, this is going back to 1971. It's historically topped out at this 350, 300 to 350 basis points above Fed funds. So, again, if Fed funds are going to bottom somewhere, let's say around 3, you're talking about a 6.5 on a 10. And if we look at I don't know if I have the term premium here. Here, if you look at the term premium, I mean, the median term premium going back to 1961 is 1.5%. Right now, the term premium is only about 90 something basis points. So you could add another 80
Yeah.
basis points on top of that just to get back to the norm. And I mean, if you want to play technical analysis with this as well, you can say that, the 10-year had
Broke
really
out.
strong, it had strong resistance here, at this 2015 level, and we've broken out.
Yeah.
And if I were doing technical analysis, I would say, oh, this looks like an inverse head and shoulders to me. And
You
we're going
are.
back
You
to,
are doing
yeah.
technical
And I would say
analysis.
we're probably going to see a term premium move back above 1.5%.
Okay.
So I don't, that's why, like, when I look at everything, I say, well, how do you get a 10-year to really go lower? The only way you get a 10-year to go lower from here is if we have some sort of recession of some significance, that Fed fund futures start pricing in lower Fed funds rates in the future. And so what I think is really happening in the treasury market isn't so much that the market's worrying about debt and deficits. The market's just reassigning term premiums to higher levels and reassigning where the new neutral is for this economy. And if that's the case, then rates have further to go. And also the other factor, I think, is that, the anchor of the world on interest rates is no more. A
That's a
Japanese
very
30
great
years
point.
trading at
Yeah.
3%. And, typically, again, when we kind of look at these spreads, the difference between a US, well, we could just do the tens, the Japanese US, and, is right now is 3%. So, I mean,
Well, let me ask you something here, Mike, because we had the panic last August with the unwind of the carry trade.
yeah, I think
And
we
then
spoke
and
around
then
that time.
yeah, and then we had this huge rally and the end weakened again. So is there another chapter to this unwind? Do you think they got it all done last summer? Because now the carry trade it doesn't it doesn't make as much financial sense.
I don't know,
I'm
Dale. I
paying.
mean, you're the FX guy. What does this chart say to you?
It says that long term, I think we're going to see a much stronger um, Japanese
Yeah,
yen that we're going to break down.
right. So that would tell me the carry trade's not done. It's not on.
Okay, okay, all right, because
And
they're paying
look,
more.
I mean, look, this is another. I mean, I don't know. I'm sure you're familiar with, cross currency basis swaps and all that other stuff.
I'm not.
But this is the Japanese yen cross currency basis swap spread. And basically, when it's really low, it means that dollar funding costs are really high. And when it's up
Okay.
here, it means that dollar funding costs are very, loose, so to speak.
Huh.
And what's interesting here, right, is if you take the SPY and you overlay it, it's the same trade.
Oh, okay.
So
Nice.
is the is the Japanese yen carry trade unwind done? I don't think so. I
Yeah.
don't know.
Yeah. I mean, it's more
It's
the
all
currency is more expensive and the rates,
we're
there's,
going higher.
yeah, it's the opposite of how it worked for a decade.
Yeah, I mean this is the Euro swap basis swap, and it's the same thing. So I think you have the same trade going on in across different regions of the world, and it's really all just about liquidity and dollar funding. And
Yeah.
so I don't know that this is by far over at all. And I think, I'm thinking that I don't know what I know they did a 40-year auction in Japan the other day. I don't know what the rate pricing was on it, but I obviously
Wow.
don't know that this was really down 23 basis points last night. I'm thinking that the maturity or the yield on it must have been lower. I haven't had the time to look at it yet, but clearly, again, the low anchor of the world is kind of gone. And even if the 40-year in Japan isn't at, 350 anymore, but it settles at 3%. I mean, that's, really big from when it was at 10 basis points in
Yeah.
2019.
Yeah.
That's got to have some sort of ramifications on that trade.
Yeah. Definitely. Where are you at with S&Ps here, Mike? Do we have the $1 million question? They're polling people, so I'll put you in the CNBC poll. Will the April low be taken out? What does Michael Kramer say this year?
I mean, well, I was one of the few people that was looking for an S&P that could be in the fours, right? And so
Yeah.
that was, we did get there, even though it was brief. Um, I mean, from a fundamental standpoint, I certainly can say that, markets are trading at, high multiples, high valuations across, you name your pick, right?
Yeah.
Your price to sales, price to earnings, price to cash flow, price to EBIT, whatever it is. Markets are very expensive. Earnings estimates are coming down, growth rates are slowing. That would suggest we have a lower, PE ratio. And you're a technician like me. Is this if we close here on the S&P, let's say we don't get a big rally today, is this a 2B top, Dale?
Yeah. Or an
What's it called? It
ABC for 4,
Yeah, like
irregular B,
yeah. So I mean, I,
and then
it,
another high.
yeah. So I don't know. I mean,
Yeah.
a lot of like I said, like if you look at the swaps, they're certainly not suggesting higher prices.
Yeah.
I use these BTIC S&P 500 futures, which basically measures the equity financing costs to go out and get to lever up, an institutional investor to lever, and that obviously has collapsed.
Yeah.
And this has tracked with the S&P for some time, and when I had done some analysis on a YouTube, I don't know if you saw it, but the one thing that really struck me as being very similar to 2022 was if you notice during this decline in 22, whenever the S&P rallied, you never got a rally in the equity financing costs. It never went with it.
Yeah.
In fact, it just continued to drop, even though, here's your big
Right.
August rally, just
Yeah.
continued to go down. Got your big, March rally, continued to go down.
Nice.
During 2023, it was rising right along with it, right?
Yeah.
Every time it made it, and then it had that blow off in December into that Fed
Right.
meeting. But if you look
Right.
at it where we are now, notice we got, the big rally here. Financing costs continue to go down. We've
Yeah.
gotten the big rally. Financing costs have not responded at all. So, I'm looking at this and saying it looks more like this than it does like this.
Yeah. So
And
there
so
should be a reversion to the mean kind of trade setting up with the decline.
I
It,
mean that I'm surprised because we've gone further than I thought we would. I
yeah.
mean, but that's the
Me too.
market for you.
Yeah.
Market always goes further than we think. And it always happens sooner than we expect. So, I mean, when you look at the ancillary data points and you think about where rates are going to like potentially heading, I mean, it's hard, and you have valuations where they are. I mean, it's hard to be like, we're going to 7,000, but who the hell
Okay,
knows?
you brought it out. That's what I was going to wrap it with. Because the melt up guys, anywhere from 7, I even know guys looking for 8. And man, early into next year, give me the fundamental narrative that would drive the S&P up to 7K.
Well, earnings estimates for next year are around $300, $295 per share. So even at 20 times earnings, 6,000 is about the best we're going to do, right? So
Right.
I mean, at 25, you would need to get the S&P at $300 per share. You would need. I'm so tired. I
Lower
can't.
rates?
No, you would
What?
need the more P multiple expansion.
Okay. All right.
So you would
Okay.
need higher PEs, right?
Yeah.
And you're talking about a P that probably needs to go to like 25 or 30. Not 30,
Okay.
but you know what I mean?
25. Yeah,
Yeah,
up
it
there.
needs to go higher.
Rich,
Um,
very
yeah,
rich.
and
Yeah.
and you also need to see, and really to drive the higher multiples, you need to see credit contract further, credit spreads. And so you would also need much more liquidity in the market to do
Okay.
that.
So you
And
need the Fed for this to happen.
yeah, I mean, you
You need
need
a Fed put.
basically something to cause more dollars to become, and right now the Fed's not, there's no more money in the repo facility to drain. I guess maybe, the ECB or China could do something. But I think it's harder for that to happen. Um, I, I don't really see the tailwinds for that.
Okay.
So,
Yeah. So that's what I mean. So I mean, I've been trying to figure out what would drive it to those price levels.
I mean, look, it can happen. Anything can happen. And I would
Yeah.
never have expected to us to even get to 16,100 if you had, I mean, if you asked me that a year or two ago, I would have never, I think we did. And I never would have thought we could have gotten there.
Yeah.
So, who knows? I mean, zero DTE has changed a lot of things, I think. And I
Right.
know that
I keep
nobody
hearing
wants
that
to talk about it, but
because they're making money off it.
go look at the DAX and find out and figure out the exact day that zero DTE started, and you'll see the similarities between the two markets before and after zero DTE. And so I don't know if something has fundamentally changed in how the market actually operates anymore, but I certainly know that on a sizable pullback, I would like to add the CBOE to my portfolio.
Okay. All right. So
Because if you
maybe
can't beat them, you got to join them.
that's right. Maybe so I mean 5,600 anywhere down there be a nice break to buy in your view.
Where?
56, 55. 55 was the first rally out. The whole rallied from 48
I
to
mean, yeah, I mean,
55.
if you're burning, if you have money burning your pockets and you want to take a chance, yeah, I mean, probably somewhere around this China tariff thing,
Yeah.
get that gap filled. That certainly
Yeah.
de-risks it a little bit.
Right.
Um, you know, so I don't
Otherwise, you're thinking the better buying opportunity is more like back under 5,000 S&Ps.
I think from a long-term perspective, yes. I mean, if
Okay.
you're a short-term trader, it doesn't matter.
Yeah.
But if you're a long-term investor and you're trying to really think about, holding something for more than 15 minutes or holding
Yeah.
something for more than a year, you're
Okay.
taking a chance up at these levels because the valuations across most, especially some of the bigger tech names are quite high, in my
Okay.
view.
Well, CNBC should add you to the list with Katie Stockton and those guys looking
Well,
for April low.
I guess I'm not.
You're not a celebrity, as much of a celebrity as
No, I've
some
tried to
people.
get on that, but I've
Yeah.
asked and they don't, I'm too small for them.
I got a birthday card this weekend from my sister, and on the bottom of it is a coaster that says legend. And I said, I said, yes, Gloria, I'm a legend in my own mind.
Exactly.
But but anyway, Mike, so um, we're in this time period where you really have to be careful. Um,
Yeah, I mean, I think
it's
you've
not a
needed.
great time to trade, huh?
Yeah, yeah, you have to be. This is a dangerous market. I mean,
Yeah.
I have no idea what President Trump is going to tweet in the next 15 minutes. He could come out with a tweet and say, he's not going to be happy about the taco thing yesterday.
Yeah, what's that acronym stand for again?
Trump always chickens out.
Oh, okay. Yeah, he
Because
doesn't like that.
you got to watch the interview and you
Uh,
got to see his face. His eyes looked like they were going to pop out of his head.
I did.
And
Yeah,
you know that Janine Pirro was behind him, and her face was like taken aback, like I can't believe they just said that to him.
yeah.
And
Anyway,
now there's things hitting the tape right now. Navarro's on TV, so they're bringing out the big guns now.
oh, I thought they had him locked in the basement.
No, he's making a re he's at there's his name is hitting
They
the
let
tape
him.
at 8:50.
They
They
let
let him
him
out of the
out.
basement.
Okay, well, maybe he wants to talk about war with China too. So he needs a war with China. That's been his whole career.
The
Um,
Trump administration's not surprised by the trade court ruling.
yeah, probably not.
Yeah. So
They don't. They don't fear the courts.
right.
So Michael, great having you again, and some. If you believe in that rising wedge you have in all these uh, different stock indices that you have,
Yeah.
and they truly are rising wedges. Wedges retrace 100%. So it implies if it is a wedge that we're going back to the April lows.
We're undercutting them,
Yeah, right. Yeah.
which is really
Or
what a rising wedge is supposed to be, right?
yeah, but
If you go
don't trade rising wedges and buy 50% pullbacks after they
right,
break
because I mean,
down.
a rising wedge you're supposed to measure like this, right? If you measure from the break,
Yeah,
so that takes you down to 4,600.
yeah. I know a lot of people that were looking for 4,500 before we made this recent ascent.
I was
Yeah, I
I've
was.
been in that camp since last year, so
What if it still happens, Mike?
it could. I
You
have
know, I
no
mean,
like I said, I have no idea what he's going to do now.
because you
His
know
section,
what, you know what that would do. Because I talk to a lot of people in the markets, and what I'm getting is people saying, "Well, Dale, did you ride it out and the recovery, did you catch it?" And they are so pleased with themselves
I
that
know,
they didn't de-risk on
I
this
know, and they
pullback.
bought the dip.
And if we take out these lows, that would be a very bullish setup to me because
Yeah,
they wouldn't come back in.
that would be your
Okay,
capitulation.
yeah, that's what I'd like to see by
I,
July.
from a long-term investing standpoint, that's what I would like.
Yeah,
Um, I
we
just,
always we don't always get what we want, but we
yeah,
get what we need.
a good kick in the teeth.
Michael Kramer, it's always a blast talking to you, buddy.
All right, thank you,
Uh,
Dale.
all right, I hope you have a great summer. We'll get back together in
In the
August and
fall. Yeah,
just see what the world looks like then. But I always look forward to being able to pick your brain and see
yeah.
your work. So
I love talking to you.
best
So
way,
happy to come back anytime.
yeah. So you could follow Michael on X at Michael Mott CM, right?
Yep, that's
And,
right.
do you have you have a website now besides your YouTube channel or what?
I have my own website, mockcapitalmanagement.com. I have a Substack that's under the name themarketchronicles.com. And I'm also
Okay,
a writer on Seeking Alpha. I have a large following there as well, about 50,000 people.
nice. So so you could run for president. And check out Michael's YouTube stuff. Um, he fills people in with what's happening and gives his insights with indicators that most people don't look at. They look at a candlestick and that's it. So you can also learn a lot about the fundamentals from Michael. He knows them like the back of his hand. So thanks
Thank you.
again. Thanks again, my trading warrior brother.
Okay, see you
Appreciate it.
again soon.
All right, Michael Mott, everybody, follow him.
Bye.
And that's, see you, buddy. And that's a wrap. Don't just count your terms and your rates, and count your blessings. And I'll see everyone tomorrow to wrap it up for TGIF. Adios.